Stop scrolling. This is not financial theory. This is a historic market alert. At approximately midnight Eastern Standard Time, Caspa, the fastest layer 1 on the planet, just quietly made a monumental shift. Its stock-to-flow ratio, the ultimate measure of scarcity, just surpassed silver. Think about that. A digital commodity with a provable, unchangeable ledger is now fundamentally more scarce than one of the oldest forms of money on Earth. The chatter says KAS is worth about 5.7 cents, but if we apply silver's market capitalization, its aggregate value, the price of one KAS coin is mathematically targeting a stunning $122. We're not here to talk about if this will happen, but how fast the market will recognize the superior ledger. This isn't a silver lining, this is the silver flip, and the implications for your portfolio are enormous. Welcome back to the channel, Crypto Fam. You already know we dive into the data the mainstream analysts miss. If you want to trade like a pro and not a panic button pusher, do me a solid, like this video, and subscribe right now. This market runs on information asymmetry, and we're here to give you the unfair advantage. The entire crypto bull case, for Bitcoin, for Caspa, for any sound money, boils down to one simple word: scarcity. The stock-to-flow model, popularized by Plan B, showed us that the value of money is inextricably linked to the difficulty of producing new supply relative to the existing stock. The old guard, gold and silver, relied on trust-based systems and messy, asymmetric data about mine yields and above-ground supplies, but Bitcoin and Caspa, they are the world's first truly digital commodity monies, where the scarcity is precisely measured and independently verified by anyone through the open-source ledger. The fact that Kaspa's S2F now exceeds silver's is a fundamental validation of its monetary premise. As Caspa report notes, why should we assume Kaspa's market cap, representing a superior Byzantine general's problem-resolving ledger, could never exceed silver's? My take: that $122 target isn't just some dream, it's honestly a technical inevitability once institutional capital digests this level of provable scarcity. The market is, pretty slow to catch on, which means our early entry opportunity is still wide open. But don't uncork the champagne just yet, because the market is designed to test your conviction, often ruthlessly. So, the technicals are currently in a high-stakes standoff. Veteran trader Askibum Trading just revived their classic chart, pointing out that 3 cents is still a magnet level for KS. Right now, we're consolidating around 5.7 cents, a hefty drop from the 2024 peak near 19 cents. Why the struggle? Well, because distribution is happening. Daily Caspa highlights a critical point. Exchange holdings are sitting close to all-time highs. This is the market's version of a traffic jam. High exchange balances mean high potential selling pressure. It's not a reason to panic, but it is a giant blinking neon sign reminding us that the smart money needs a clean, low-leverage entry to fuel the next parabolic move. The whales are trying to shake out the early winners who bought CAS at half a cent and the late FOMO buyers from the 19-cent pump. They need liquidity, and yeah, they're using this consolidation phase to create it. It's a classic reaccumulation zone, and if we touch that 3 cents magnet, that's where the true conviction of the long-term holders will be forged. So, my expert analysis: the tension between scarcity, or S2F, and liquidity, meaning exchange holdings, is what makes this market so explosive. The long-term upside is validated by the fundamental S2F flip, but the short-term price action is being dictated by the whale's need to reload cheaper. This is the battle between macro theory and micro greed. This is where the Caspa thesis separates itself from the rest of the Layer 1 pack. It's not just about S2F, it's about superior technology and hyper-scarcity. Let's talk emissions. Caspa isn't doing a slow, leisurely Bitcoin-style halving. It's using a geometric emission decay that halves annually through monthly reductions. Dilsa Crypto One reminds us that we are entering the scarcity zone, with 94% of the supply mined by the end of 2025, only 6% supply left to be mined. This is an accelerated scarcity curve designed for speed. The price appreciation isn't a steady climb, it's a series of violent, supply shock spikes. My opinion is that this forced, rapid scarcity is the core driver that makes that $122 silver flip target not just possible, but highly probable on a short timeframe relative to other assets. Security and speed are the keys to a superior monetary ledger. You know, IY Stan Dons really hits the nail on the head here. Caspa's over 1,000 public nodes are honestly the backbone of real decentralization. More nodes mean greater security, faster propagation, and absolutely no single point of failure. This kind of node growth is, in a way, the silent catalyst for institutional trust. Institutions aren't just investing in price, they're putting their trust in Byzantine-proof resilience. This robust decentralization, paired with the DAGKnight upgrade that's coming in the first quarter of 2026, is set to push transaction finality into the sub-second range. That, honestly, is the very definition of internet-scale money. It's a massive leap over all the current slow proof-of-work chains out there. And despite the short-term volatility, the long-term price targets are really starting to firm up. So, Dilsa Crypto 1 sees Caspa hitting between 7.5 to 10 cents as liquidity slowly returns to the broader market. Honestly, I believe this is highly achievable. The recent VPROG network upgrade, along with the heavy whale accumulation, are really the quiet engine running underneath the surface. This is, a high-volume spring just being compressed. The break of the 7-cent resistance level is the technical signal that the accumulation phase is over, and the run to the next major psychological barrier is on. The founder, Yonatan Sampolinsky, states their task is to do Satoshi's work correctly, or more optimally.
Redo Satoshi's proof-of-work paradigm.
This isn't a new layer 1, it's really a 2.0 refinement of the proof-of-work ethos. Caspa took the best of Bitcoin's rejected scaling solutions from the 2010s and, well, birthed the high-throughput block DAG. It keeps the security of proof-of-work but adds the speed of a directed, acyclic graph, hitting 10 blocks per second with a goal of 100 blocks per second. This combination of proof-of-work security and DAG speed is honestly the ultimate technological differentiator. It's the fundamental basis for the superior ledger argument against silver and even Bitcoin. This market is not for the faint of heart. Here's your actionable playbook for navigating this Caspa cycle. The 3-cent magnet is a gift, not a curse. Use the elevated exchange holdings as a signal of potential short-term pressure. If we see a dip toward the prior accumulation zone, treat it as a low-ego, high-conviction buying opportunity. Dollar cost average into that fear. Remember, you're buying a commodity that just surpassed silver on the most important monetary metric. Do not become the exit liquidity for the whales. As the price nears 10 cents and potentially 19 cents again, be ready to take partial profits. The long-term vision is strong, but capital preservation is paramount. Set firm, technical take-profit levels, not based on hope, but on RSI overbought conditions and supply zones. The interest from Keystone Hardware Wallet is a massive signal of approaching institutional and retail adoption. Hardware wallet support is a prerequisite for security-conscious hodlers. Watch for multisig and UTXO management features, as this is the infrastructure that will onboard serious capital. No blind signing. That's smart money security protocol in action. So, we are witnessing a transition where, honestly, a digital asset is proving its fundamental scarcity superiority over a physical asset. The $122 price target tied to silver's aggregate value is, well, the true North Star. By the end of this decade, Kaspa's S2F ratio will actually exceed that of both gold and Bitcoin. If you believe in the power of provable scarcity and, a superior ledger, then Kaspa's future market cap is really limited only by the size of the monetary metals market itself. This is, without a doubt, one of the most exciting shifts I've ever seen in crypto. The data is clear. Caspa is structurally sound, technologically advanced, and fundamentally more scarce than silver. Now is the time to be focused, smart, and honestly, surgical with your entries and exits. Thank you for watching and always challenging the market consensus. If this analysis gave you the clarity you needed, just hit that like button and share this with your trading circle. Check out my other videos and I'll see you in the comments. Stay safe out there. Remember, this is not financial advice. I am an analyst providing commentary on a highly speculative and volatile market. Cryptocurrency investment carries significant risk, including the risk of total loss. Digital assets are subject to market manipulation and regulatory uncertainty. Always conduct your own exhaustive research and only invest what you can afford to lose. Trade responsibly.